Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, it was a volatile day of trade, Yatin, Friday, but one where we are ending the day on a positive note, given the fact that, at one point we had slipped below that 21,650 mark as well, but we did manage to stage a good recovery for both the benchmarks to end the day in a positive, on a positive note. Today, I think it was a day for the mid-caps and the small-caps to correct. At one point, on the mid and small-cap indices, we saw cuts of somewhere around 2.5%, but, some bit of recovery coming in there as well, with the Nifty small-cap index ending lower by about 1.5% or thereabouts, and the Nifty mid-cap index ending lower by less than 1%. So, we saw some bit of rebound there as well. But, of course, the bread was firmly in favor of the losers today, and some of the sectoral losers, if we talk about them, you had metals, auto, realty, IT, all of these sectors was under selling pressure. But banks, they made a good rebound today, Yatin. Nifty Bank index ending higher by about 1.5%. Nifty PSU Bank index as well, ending the day in the green. And if you look at the Nifty gainers, among the gainers you have Grasim on the back of good numbers. Grasim was among the top Nifty gainers, 5% up. SBI continues to gain, Yatin, third straight day of good gains coming in on SBI. Apollo Hospital, Sun Pharma, ICICI Bank, and some of the other private sector names, bank names were also among the gainers. On the losing end, M&M, top Nifty loser. ONGC, I think numbers are coming out tomorrow, Yatin. And of course, the fact that, we've seen oil prices also come in above, rebounding above that $81 per barrel mark. So that's had a bearing on some of the oil companies. But, it's largely seen as a positive for ONGC. For OMCs, of course, the oil rebound will be, a negative. But for refiners, ONGC, RIL, crude prices rebounding is a positive. But nevertheless, ONGC under pressure ahead of numbers. UPL continues to languish. Hindalco, NTPC, Tata Steel among the losers. But Yatin, a day when we saw some of these PSU stocks correcting the power financiers, and even for Paytm as well, another down day. Tell us which are the stocks that that made headlines in the mid-cap.
Nandita, today, unlike yesterday wherein mid-cap was holding out as a pack, today we saw some correction, especially in the PSU stocks. On an intraday basis, obviously, because, in the second half we saw some recovery, but still the advance decline ratio was almost 1:2. So, one advance to two declines is there, something which impacted the overall mid-caps. Now, among the losers in the PSU basket or the mid-cap space, we had PFC, GICD, RVNL, BML, all of these stocks falling anywhere between 7 to 8%. In fact, PFC and REC both, have seen some massive unwinding in the future and option segment as well. That apart, in the mid-cap gainers, we had stocks like Z making a strong comeback. In fact, Z was one of the top traded counters in the FNO space, also gaining by nearly 5%. Idea also gaining by nearly 5%. Yes Bank gaining by 5%. And among the other mid-caps, we had Birla Corporation and Swan Energy flying by nearly 7-8%. So good gains coming in a few of these companies, especially with Z and Idea, wherein a lot of traction is seen in the FNO trade.
Right, of course, but as Yatin mentioned today, it was a day of profit booking for some of the PSU names. But with that, let's take a look at the stocks that are on our radar this afternoon. PSU names on my radar, Yatin. LIC being the first one. Of course, it has seen a good rally. So far this year, 30% up. In fact, even the last 5 sessions, it was up somewhere around 12 to 13%. Today, it saw some bit of profit booking. Numbers also came out yesterday. Today, it was down 2%. Numbers were good. If you look at the value of new business, that has shot up 46%. VNB margins, that is also closely tracked, that has gone up and come in at 20% versus 14.5%. And the higher net income from investments and growth in net premium income rather aided the third quarter performance. And management was on CNBC TV 18 today and has given out good commentary when it comes to the coming quarter as well. It says that the annual premium equivalent, which has grown in excess of 7% this quarter, will grow further or improve further in the coming quarter. FY25 as on the whole will be better than FY24, and they've said that they expect double-digit premium growth in the next fiscal as well. And the VNB margins are also expected to stabilize further. As I mentioned, the stock has been on an uptrend. Of course, last year when the entire Adani issue had come to the fore, we saw LIC shares taking taking a beating, of course, because of its high exposure to Adani stocks. But, since second half of last year, we've seen a very good rebound. The stock went up above that IPO price for the first time in late January. Now it has cleared that 1,000 rupee mark. In fact, it has become India's fourth most valued company by market cap, Yatin, 7 lakh crore rupees, and it has joined the ranks of RIL, TCS and HDFC Bank, and then LIC in the pecking order. So yes, things have been looking up. There were concerns of market share loss to private players, but as of now that concern is not there. And if you look at the total market share for LIC right now, I think it has a 59% market share according to IRDAI data, and assets under management in fact increased 11.9% on a YOY basis. So good going for LIC. We've seen great run up on the share prices as well. Let's see where it's headed from here, Yatin.
Absolutely. And after LIC, this is probably an old age stock, if I may put it so, because it's like zindagi ke saath bhi, zindagi ke baad bhi. But the new age stocks like Zomato, they are doing extremely well. In fact, if you look at the third quarter earnings, they have been quite strong for Zomato. They have turned into profits. Yesterday, the numbers came in slightly, near the market close. Now, the most important point here made by the management, which the market appreciated, was the break-even of Blinkit. Now, this quick commerce business is expected to get break-even by Q1 of FY25. So, 2 quarters probably from here on, we could see Blinkit also break-even. And probably analysts believe that if Blinkit breaks even, there could be a significant upside to the overall valuations for Zomato. Now, HSBC has increased the target price to a level of 163 from the previous target of 150. They expect the normalization in the food delivery business going forward. In fact, if you look at the quick commerce business, it is expected to see strong growth and improved profitability. So, on a higher base, they could get better profitability from here on, is what HSBC believes. They also believe that quick commerce is all set to EBITDA break even by Q1 FY25, as I said earlier. And obviously, if you look at the last 12 months, there has been a big recovery in the share price of Zomato. Probably you cannot expect that kind of a return in the next 12 months. But yes, from here on, there could be some good improved performance for Zomato. And probably from here on, the valuations could slightly improve for the share price.
That's correct, Yatin. I was talking to Karan Tarani of Elara Capital in the morning as well, and he said that of course the kind of returns, the point that you mentioned, the kind of returns we have seen over the last 1 year, it will be difficult to replicate that in the coming year, at least in the near term. Even though he expects I think targets of somewhere around 185 or thereabouts, he said the near term upside looks a little limited, and much of the good news may already be in the price. But some of the brokerages have pegged target above 200 rupees on the stock as well. That's the 12-month target, of course. So we'll have to see. But yeah, right now, of course, sumptuous gains coming in on the shares of Zomato as well, 4% up today. But of course, as I mentioned, I have a couple of PSU names on my radar. RVNL is the other one. That stock has seen a very good run up. But today, of course, came under a fair share of profit booking, plus the fact that earnings were a little disappointing. The stock was reacting to that as well. 8% kind of downtick on the back of disappointing earnings. If you look at the profit, dropped 6%, revenue as well has dropped over 6.5%, other income surged 16%, but net profit of course still remains under pressure, 6.4% downtick there. Margins have also narrowed by 20 basis points, coming in at 5.3% vis-a-vis 5.5%. And if you look at sequentially on a quarter-on-quarter basis, margins have come down by 80 basis points. Now, the government had sold some bit of stake, 5.4% to be precise, in the company in July at 119 rupees per share, Yatin. But since then, the stock has already doubled. But now government holds somewhere around 72% stake, which is valued at 40,000 crore rupees or thereabouts. But today, in fact, the stock has seen the worst drop since January 23. And if you look at over the action over the last 5 days, it is down somewhere around 11%. So if you talk to, of course, the reaction that we are seeing today is on the back of disappointing earnings, but the stock has run up so much that the kind of up move that we've seen, I mean, it's kind of a break to that, right? And if you talk to some of the technical analysts, they believe that it's a price-wise correction really that's playing out after a strong vertical up move in the stock, and they are advising a pragmatic and wait-and-watch approach for the counter to complete its correction phase, and then perhaps investors can look at entering this stock. But of course, we'll have to see really how things pan out, because If you look at the monthly charts and 6-month charts, you'll see great gains. But off late, it has lost some bit of steam. And we'll have to see whether or not we could continue to rally on a breakneck speed the way it has been over the last year or so. Yatin.
Absolutely, and railway stocks in particular, even if there is a slight disappointment, the reaction will be quite sharp because the shares have run up so much, Nandita. In fact, RVNL used to be a 25-30 rupee stock, and we have seen almost a 10x returns in the last few years or so. In a couple of years, obviously, wherein railway stocks have caught a lot of investor attention.
Well, right, those were the stocks then on our radar this afternoon. Of course, we are entering a weekend. Seemed like a very long week to me, but yeah, we'll be wishing our viewers a very happy weekend. Have a great one. But of course, come back and join us on Monday morning, all recharged, and send us your queries, and we'll be taking them up on Morning Trade. But for now, it's a goodbye from me and Yatin. But you guys stay tuned to Money Control for all your other news and updates. Thanks a lot for watching.